Welcome back. You are still watching Business Watch, powered or brought to you by Nedbank. And now it's time for our market analysis segment, which is why in the studio we're joined by Nozibusiso Dembe, who is the treasury dealer at Nedbank. A very good afternoon to you, and thank you for joining us. How are you feeling?
Thank you. I'm good. How are you?
Good, good. You look great.
Thank you.
Let's get into it. Despite the world's, being the world's most sanctioned country, Russia has continued to use its vast energy wealth to bankroll its war in Ukraine. Now, of course, U.S. President announced sweeping new secondary tariffs will impact any country still trading with Russia if a ceasefire with Ukraine is not agreed by Friday, August 8. How could we see this, hitting the global economy, especially when it comes to oil?
Thanks, Nosilia. We're going to cover it in the part of oil as well. But I think that took the market by surprise a little bit. But it seems they've managed to shrug it off, probably amidst all the other trade threats that are going on. They've managed to shrug this off because this was all started by India. India is purchasing oil from Russia, and Trump has threatened to impose tariffs higher than the 25% he had initially offered on India. So the market did shrug this off, but I think when it gets more pressing, that's when you'll start to see real effects.
All right. I think this is an update about an hour ago where Russian President Vladimir Putin met with Steve Witkoff, who is U.S. President Donald Trump's special envoy for talks in Moscow. Now, this meeting comes just days before a deadline, August 8, to agree on a ceasefire in Ukraine. Could this be music to the ears for markets when we get into the figures?
It could be, but also it's really about the outcomes of the conversation, right? We've seen a lot of negotiations, whether trade or whatever the case, but what matters more is the outcomes of it. So I think it's a good indicator, though. It's a good indicator.
We've seen a lot happening since Friday, from rates, interest rates to losses, but the market has really shifted focus to a whole lot of things. How are the currencies looking?
Yeah, no, Friday was quite eventful. We had a lot going on. We had jobs data coming out. We had trade tariff deadlines. We had interest rates locally and in South Africa. But to start with the jobs data in the US came out on Friday, and the market was shocked because it came out much lower than expected. For July, the figures show that 73,000 jobs were created, and that was quite low in comparison to previous months. Right. And then also the jobs data for the previous months, being May and June, were also revised. So in May, what was initially announced was 144,000 jobs. Right. That was revised down to 19,000. And in June, 147,000 jobs were announced, and that was revised down to 14,000. So these are significant revisions, and they've caused President Trump to actually order that the Commissioner of Labor Statistics be fired, because these are key matrices, and the significant revision is quite telling. So that's what that has caused, and it's also caused, on our side, the rand to strengthen because the US dollar is weakening. Right. So right now, at the moment, we have the rand strengthening. The US dollar against the SZL is trading at 17.8366. The pound against the SZL is trading at 23.7201. The euro against the SZL is trading at 20.6929. But the rand is also riding off the back of increasing gold prices. So we'll see later when we talk about gold, the price of gold has been edging up, and with South Africa being the largest producer of gold, that increase also helps the rand. You also spoke about tariffs. 1 August was the tariff deadline that we're all expecting, where all the countries needed to have been done with their trade negotiations by the 1st of August. The 1st of August came and went. South Africa seems to have not managed to secure a trade deal with the US. The EU has managed to secure 15% tariffs with the US, but they still do face 50% tariffs on their copper exports. A lot of other countries have managed to secure tariffs, trade deals, including the UK, Japan, Palestine. They've managed. A lot of them have managed, but a lot of countries have not managed. So these are very, very uncertain times in markets.
On the issue of tariffs, Zibu, if the US goes ahead with secondary sanctions, especially over India and its Russian oil, imports. How could this affect global trade flows and India-US relations in the long term? Not to say that you are a political analyst, but just give us the picture there. How could we see Asian markets reacting to this?
So the markets are likely to react quite negatively. I think the people who will be hardest hit will be the consumers, which is me and you, because if tariffs are imposed and secondary tariffs are added onto that, that automatically makes the cost of living very expensive.
Right.
Inflation shoots up. If inflation shoots up, interest rates shoot up. It becomes expensive to borrow money. So those are the things we're most worried about, more so in the inflation aspect of it, because that will affect a lot of people, especially the consumers.
Right. And our equities this Wednesday, how are the numbers looking?
On the equities front, the S&P 500 has been suffering losses since Friday when the jobs data was announced. It's suffered, I think yesterday was the 5th day of losses for the S&P 500, but hopefully the investors in the next couple of days will be monitoring the earnings reports from major companies like Disney, Uber, McDonald's, and so on. So maybe those earnings reports for their half-year earning will change the direction for the S&P 500. But the losses you're currently seeing on the screen are on the S&P 500 are led by tech stocks. On the FTSE, it was also impacted by the jobs data on Friday, quite significantly, but you can see it's recovered quite well. And that's also because their earnings reports for key companies within the UK were also announced, and they've allowed the bounce back. And then the JSE All Share Index had a sharp downturn on Friday after South Africa missed the deadline for tariff negotiations. But you can already see on the screen that it's starting to come up again.
What is driving that improvement?
I think it's more so hope. I think it's more so hope, and also due to the interest rate cut that happened last week Friday, a lot of investors sort of tend to move their investments into stocks when interest rates decrease. So that's probably also it.
And our commodities?
On the commodities front, I think we've touched on it quite a bit already, starting with oil. Oil is currently trading at $71.41 per barrel, and the price of oil slipped on Tuesday or yesterday due to rising OPEC supply. On Sunday, OPEC supply announced that it will be increasing its supply from September, and as well as coupled with a weaker demand for oil. So the market, I think, for a while has been concerned that the demand for oil in the next coming months up to year end will be quite low. So there is that combination is driving the price down, but we might see it rebound as the day progresses. On the side of gold, gold is currently trading at $3,364.81 per ounce. And I've already indicated that the price of gold has been increasing, started on Friday when the jobs data was announced, but it's for a combination of reasons. The first is safe haven demand caused by this uncertain tariff period that we're in. The second is the expectation of interest rate cuts. The jobs data on Friday kind of indicated that the economy in the US might be struggling. So in order to stimulate that economy, what they typically do is then cut interest rates. So the expectation is that there'll be 2 more interest rate cuts before year end, starting in September. And that also has then ticked up the price of gold. And then lastly, President Trump, we're waiting for President Trump to make his announcements about the appointments in the Federal Reserve. We had the governor resign last week. And we know also that President Trump has been after Fed Chair Jerome Powell for some time now, threatening to replace him, threatening to have a short list of candidates to replace him. So I think with all of that going on, the price of gold has been ticking up because at the end of the day, it is a safe haven.
The price of crude oil, though, is also somewhat improving today. For consumers, can we expect a decrease anytime soon?
So hopefully, because I'm a consumer too, hopefully.
Okay.
But realistically, it also takes a while for the fluctuations in the price of crude oil to actually translate to a decrease or an increase in the price of fuel for us. And also there's a lot of factors that go into the price of fuel, especially in our economy. There's a lot of levies that go into that. So it won't immediately translate, but between you and I hope so.
We can only hope. Thank you very much, Zibu, for your time. We'll be on the lookout for those numbers. But for now, we'll catch a break when we come, and I'll see you in a bit.